Good morning and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Thursday the 25th of July. It's the ECB today and we've got a reaction where the markets are fairly consolidating, a little bit of a shade of dollar strength, a little bit of a shade of equity strength, but nothing too decisive in terms of direction. That rebound that we've had in the dollar just is holding ground, and what we saw yesterday was the S&P 500 breaking to all-time highs on a closing basis, and certainly that has helped to generate a little bit of positivity in today's session. But the ECB is the crucial swing factor today. Now, the euro has been under pressure in recent days as the market has been sort of moving towards possibility or a greater possibility of an ECB deposit rate cut. It's still not expected by the market. I can show you the expectations of the ECB, which is for no change to the main refinancing rate and no change to the deposit rate. But you can look at other measures, and it's around about 50-50 probability today, even though the consensus is not expecting a rate cut. But still, what we're looking out for is, I think the standard position at the moment is that the ECB will not cut rates, but it will guide for a September rate cut for the deposit rate. Now, how the ECB sort of sets its stall out around that expectation will be key. If the ECB then strongly guides for a rate cut and potential for quantitative easing, then I think we're likely to see the euro under significant pressure. But if it sort of steps back from that and doesn't really do a great deal surrounding the possibility of a September rate cut, then we could see the euro rallying. But what we are seeing today at the moment in front of this is the euro, which has dropped back not too far off from its key low around 111.10. If it breaks that to the downside, and certainly on a closing basis, that would open 110 figure and further moves to the downside. I'll talk about the technical implications of all this in a little bit on the euro dollar chart. Outside from that, you had a rebound on sterling yesterday. We've got a new Prime Minister in the UK. It is Boris Johnson. That was confirmed yesterday, and he's surrounded himself with a fairly let's just say Brexiteer leaning cabinet, and nothing too decisive in terms of how sterling moved yesterday. A little bit of gains that we saw yesterday, but that's just started to just come under a little bit of a stalling today. But again, technical implications of this move I'll talk about on the chart analysis. We've seen gold, which is consolidating. Interestingly, we've seen the Treasury yields, which are basically flat at the moment. Nothing too decisive. A little bit of a drift off today, but again, I think the market will be responding more to how the ECB sets its stall out today. The oil price, again, a consolidation move in recent sessions, been a bit choppy. Had a bit of news flow surrounding the Persian Gulf, but nothing really there. But also we continue to see some negative signals coming through from global growth indicators. Germany for today is not going to help the oil price necessarily, but what we have got is this consolidation at the moment. So in terms of data points today, I just mentioned that that German IFO number. That German IFO disappointed across the board, falling to multi-year lows on that business climate number to 95.7, well down again, and accelerating low across the board there. So not great figures there. At 12:45 we've got the ECB rates decision, and then at 1:30 you've got Mario Draghi giving the press conference. That will be interesting. Also at 1:30 you've got the durable goods number for the US, expected to show growth in June of 0.2%, and then later I should say, and then you've also got the initial jobless claims at 219,000 there. So basically where we've been in the last couple of weeks. But this ECB meeting is going to be the crucial factor today. Now, my chart today is euro sterling. Now, euro sterling, as I said, sterling strengthened yesterday on that Boris Johnson coming in to be Prime Minister. Now, that has completed a small head and shoulders top pattern. 89.50 from 90.05 gives you around about from 90.05 is around about 100 pips of projection downside, which is 88.50. But you've got this key reaction low of 87.70, which it looks like sterling is going to be coming back to be testing. And given the fact that you've got the euro under pressure at the moment from the ECB, it could come back to that sort of level. It'll be interesting to see, is that the sort of area where you've got support band around 88.30 to 88.70, is that where we're going to start to see the support forming? That 88.50 level of target downside move is bang in the middle of that range. So what we do see at the moment is technicals deteriorating. RSI back in the mid-40s, MACD lines pulling back decisively, as are the stochastics. So this is certainly corrective, and if the euro remains under pressure from the ECB today, then I certainly think this could continue lower. But ultimately, I think euro sterling will be a chance to buy at some stage, because I can foresee sterling weakness on the back of moves and pressure towards a no-deal Brexit. But ultimately, I think that will be pushing euro sterling higher. But in the near term, I think we can see with the technicals there has been a breakdown, and the market is targeting 88.50. So with that in mind, I wish you good luck in your trading today. Please click here to subscribe to my daily trading videos on YouTube, and also you can go to our website where you can sign up to our trading webinars. Thank you very much.